And good afternoon. Welcome into Market Talk for this Thursday, April 28th. Great to have you with us once again. I'm your host, Jesse Allen. Thanks for making us part of your day today. Your very busy day, I'm sure. But thanks for making Market Talk part of it. Find us online. MarketTalkAg.com is our website. You can find all of our streaming sources, our radio affiliates, the latest news of agriculture, and much more. It's all online at MarketTalkAg.com. We've had a lot of news headlines this week in the market trade, continuing to see some of those play out here today. We got a rising US dollar, 19-year highs, maybe giving us some headwinds, but still plenty of things to discuss and some positive things to discuss here in the grain markets. Let's talk about all of that. Let's bring in our good friend Bryan Doherty with Total Farm Marketing, Senior Market Advisor. Bryan, appreciate the time, sir. As always on a Thursday, how are you?
Jess, we're doing great. Thank you. Yeah, a lot of things to talk about. I know we've been saying that almost every week, but it is dynamic. There is movement everywhere. There's a lot of money flow. We've gone through the last 2 or 3 years with such dynamic changes worldwide, and that's been the big difference. I think about historically, Jesse, things that happen generally localized to the US or something happens in Australia or South America. This is everywhere. It's global. It's food shortages, it's weather, it's global warming or climate change, whatever you want to call any of this. It's whether you believe it or not, it's in the news, and news is perception, or perception is news. It creates emotion to people. They buy and sell off of it. So we just got a lot of moving parts right now.
Definitely do. Well, let's go through a few things here for today. Corn market was probably the best performing out of the grains outside of soybean oil. We had that big corn sale to China announced this morning, a little over 1 million metric tons. That seemed to give us a little bit of support in this corn market. What's your thoughts with corn, some of the new contract highs we've seen, et cetera, Brian?
Yeah, it's been an interesting week because on Monday we had a pretty tough start to the week, and in a market that was technically probably overbought. We talked about that last week. Hit some areas of resistance, fell back, and boy, the buyers came right back in. But again, earlier in the week, I think it was Tuesday, the rumors, or Wednesday, the rumors of China buying started to really surface, and then we got the confirmation this morning. So you have that. But the other thing, we're at a time of the year where today is Thursday. From Monday to Thursday, it doesn't sound like a lot, but it's 4 days, but it's four key planting days, growing degree days. Well, not so much growing degree, but days of field work that a lot of people aren't moving much, and they're trying to get going, but it's fits because you start and you stop. You get rained out, but it's been cool. So you're kind of now getting to where the rubber hits the road a little bit more importantly each day and each week in May, that it's not urgent, but you're starting to push maybe the corn crop more into one window at a time rather than spacing that planting season out over 6 weeks. And now maybe 4 weeks.
And that's a great thing to think about as well. Just with the weather front in general, we are that calendar. It's not a panic time yet, kind of as you alluded to there, but it is getting to be a tighter window for this corn market. And I've heard some, the I states slow planting, although I'm hearing some pockets of planting in parts of Iowa now. But it's just going to be very interesting to watch the next, I would say, 14 days, what we have for planting progress there in the heart of the country, Brian.
Yeah, really critical. So today I can lean toward the bullish news and look at these things. Think about 10 days from now, if the weather breaks and planting moves forward, the dollar's higher. Think about how things could change. So the point I'm going to come back at is it's okay to be friendly. We've been friendly for a long time, or I should say the market has. I don't know about we. The market has been friendly, but we're up against 750, a little over $8 corner. We're really not just blowing through that level. So kind of as a producer, think about what that means. Again, time of year, March, April, May, not unusual to see contract highs established. So you should be trickling some sales in. You only know with hindsight what you should have done. But when prices are high, if they escape, it really gets kind of painful to look back and go, ah, I knew it. So if you know it, keep trickling some sales in, or look at trying to maybe perhaps get some put options or something in place to shift the risk. These are just really tremendous prices. We won't know until the end of June what the acreage really looks like.
The winter wheat markets today under some pressure, and a lot of that I have to just wonder partly why. I'm hearing from a lot of farmers in Kansas that things are not good with that winter wheat crop, that hard red winter wheat crop. Yet we're moving lower, but of course, U.S. dollars I mentioned top of the show, 19-year highs. I would have to think that was an overall maybe weight on the markets here today, just with that 19-year high in the dollar, Brian.
There is no doubt it is a weight. The dollar's up in the month a little over 4%. So if you take as an example, $10 wheat, that's 40 additional cents it costs someone to buy wheat just on the dollar alone. That's pretty significant. Did I do the math right? Yeah, 4% of $10, right? 40 cents. So you've got that. But the other thing you got, Jess, is you do have a 6 to 10 day forecast that basically blankets the entire central United States with above normal rainfall. So in some of these areas where they're really, kind of pushed to the limit of needing some rain, there may be some relief in sight. And I think the Bulls kind of, took a breather on it because of that. Um, I agree with you. You look at the chart and go, well, if I look at, for instance, July, let's just take July, Chicago wheat, that peaked on March 7th at over $12, and here we're under 11. What gives? We've had 6 weeks of dry weather and concerns and issues. Um, it just sometimes you got to be patient. The market's going to take some time to get to where it needs to go. It is still high price though, and I think that sometimes you run into where, you know, you're bullish, I'm bullish, the next guy's, but somebody's still got to step up and buy it though, and that's a problem. They don't want to take the risk because if you're buying $11 wheat, you got to think it's going better than 11, and that's the nature of the markets on occasion.
On the flip side, front month spring wheat poked its head over $12 today, then kind of backed off at the close. But obviously, planting delays across the northern plains. We've gotten some numbers from Stats Canada this week that have, maybe bumped up, I believe, bumped up the acreage a little bit with that crop. But you look at spring wheat, obviously, with the planting delays in northern plains, that seems to be the catalyst for moving that market a bit higher right now as well, Brian.
It really is. Talking to producers today, some in North Dakota or in the Dakotas, um, they're not panicky. They're not, but it's they'd like to have the wheat in the ground already, and they've got a pretty cold forecast and some snow in the forecast this weekend, and it's you're talking to me in southeastern Wisconsin. We were just looking at the forecast. Next week we're going to have days in the 30s as our lows. But boy, we're not warming that soil up very quick. So again, it's kind of this looking at tight supplies, looking at scenarios where rain could keep people less than active in the field or desired at this time. And it's a challenge. Looking at other I'm just looking at a couple other charts here quick. I'm looking at this. It's a financial sell contract with Black Sea wheat, new record highs prices today. So the world supply of wheat is tight, conditions less than ideal. Um, Hard to be, let's say, bearish right now. It is a high price. The dollar does concern us. So again, let's talk, you know, likely defend with put options, something that floors the market, leaves the top side open.
Brian, let's move to the soybean market. A few things there. Just in general today in soybeans, looked like a little spreading there. I know that May contract was down 20 cents at the close, but then, new crop November was down almost 4 cents. So, what do you make of the soybean market today? And that's not even mentioning, of course, the edible oil story that's out there this week.
Yeah, so you got the edible oil story, but the here's the interesting thing in the bean market today. When you take a look at the export sales today, the Thursday report, they've just reached what the USDA said we're going to do for the year. So something's got to give somewhere, and that's why we've got $17 beans. That the market probably thinks we're going to see some additional upgrade to the export expectation. We still have to deliver those beans, of course, but remember that in part of Argentina, you're still growing some crop, maybe some in Brazil, very little, but some dry areas. But the big drawdown, we'll see in the next USDA report, likely another drawdown to the Brazilian crop. And consequently, it probably means supplies are tight into the end of summer. And there's some talk that, Brazil could be out of beans by August, maybe September, which means that's why we're seeing the export sales on the new crop like we are. Again, we saw some good numbers today there. So the story there is continued end user covering, not necessarily buying and, for lack of a better word, like buying and hoarding, but covering their needs as they look ahead.
Indonesia banning the export of crude palm oil here this week, and a little bit of back and forth with that and different statements, and then settling on that ban of crude palm oil yesterday, and then I even hearing a little more chatter about it today. Still seeing bean oil higher, crude oil higher as well. What's your thoughts with that whole Indonesia palm oil ban story and just how that plays into everything, Brian?
Great observations. It's just the wording the last couple of days has had me scratching my head a little bit. I thought it was banned yesterday, and then I said oh, today it was banned. So anyway, regardless, the when you look at the palm oil contracts, the futures contracts there, a new high contracts this week. The big picture is it's symptomatic or respective of tight world vegetable oil supplies. We've been talking about that for it seems like 8 or 9 or 10 months. Um, it's symptomatic of the world, I think, becoming very more conscientious of food security, food safety. This whole war brings it again to the forefront. Um, it is an interesting time we live in where sort of that, is at the grocery store mentality is starting to get a real hard look even here in the US. Pandemic
Definitely.
started that, but yeah, it's going on 3 years now, less than, you know, record type could have been crops. We've had some challenges along the way.
Brian, let's talk livestock. The hog market today fared okay. We got much better export sales than last week here today. Mexico, a top buyer. China was absent though on the weekly export sales for pork. What's your thoughts with the hog market first as we got Thursday's trade settled up here?
Yeah, we did get some recovery today, but we've got a really challenging technical picture on the hog chart. We've talked about that here last week when we saw that right shoulder really coming to bear fruit, and all of a sudden the market, had some really rough days here. What is today? Thursday, and Monday, Tuesday, or Friday, Monday. Um, Testing the 100-day moving average. I think some traders probably took their gains today, thinking that was enough for now. The pandemic lockdowns in China concerning for overall demand for everything. But perhaps, the thing that we wondered is it seemed like if you've been following the hog story in China for the last 3 years, they reached pre-pandemic hog herd sizes several months ago. So I'm not so sure that export market was ever going to be quite as active from US to China. I may be wrong on that. And then we finally put in that big bearish key reversal at the top of the market. You and I talked about this along the way that maybe the hog market's kind of getting over its skis. It just seemed like there was no end to the bull market, and then it ended hard and fast. So the supporting factor in hogs is that the U.S. hog herd is down. You've got high feed prices, high meal, everything's high. You're probably going to keep the hog herd somewhat slim. You've had nothing but disease issues throughout the Midwest with the hog herd. So this pullback is a technical correction. There may be some more downside, but boy, I'd be surprised if we see less than $100 hogs. And that's really where the index is anyway. So the summer months probably just got ahead of themselves with hindsight.
How about over in cattle, Brian? Since we last talked, we had that bearish cattle on feed report last Friday, and we got the cold storage numbers as well, impacting pork and beef. Today, live cattle down, feeder cattle mostly higher. Cash trade this week looks like it's pretty much done, pretty much steady. What's your thoughts with the cattle market as we look to end the month?
I'm going to stud pretty steadfast. I think the cattle market's almost the tale of two cattle markets, the south and the north, it seems. And we maybe have focused a little more in the north where drought conditions and lack of pasture conditions, and now out west. So I think the feedlots and the placement numbers are a function more of that. Um, High grain prices should keep the feedlots kind of moving things right along, but then we keep stubbing our toe with pandemic or inflation or things that seem to kind of hinder demand. But I think from a long-term supply perspective, history has never been kind to hog or just herd growth, hog cattle growth. in high price grain markets. So ultimately, I think we're getting friendlier and friendlier and friendlier on the back months. It's the front months that we've got to continue to deal with some of these extra supplies, or I think some producers just, you know, getting rid of cows, getting rid of heifers, putting heifers into the feedlot, saying, I don't know, I can grow $7 or $8 corn. I don't know if I really want to pasture out my cattle this year. Maybe I'll become more of a grain farmer.
Sure, sure. How about the dairy market, Brian? Any thoughts there as we look to wrap up the month?
Like all the others, really volatile. Same issues we've talked about before. In order to increase that production significantly, you need labor force and you need some perception, at least, that the inputs are going to cheapen, which we've got none right now. So the labor force is tight and corn prices are in the new highs. So it looks like the milk market is well supported. Ultimately, we expect expansion, but it may take a good spring, and we're off to kind of shaky, but it's too early to tell in dairy industry. But a good spring of hay weather, good hay crops, feed and food that people can feel pretty confident in penciling out. I say people, herd managers saying, you know what, I think we can add 5% or 2% or what have you. So I think we're going to hold up pretty well for a while. But again, we're at levels that historically, when we've got to these levels, the consumer has just kind of said no thanks. And we have to see if that'll be the case again. My hunches with high fuel prices, inflation, $24, $25 milk is going to be it. It's easy to make bull arguments in bull markets, but you've got to have, again, going back, you got to have the consumer or somebody step up and buy $26 milk thinking it's going to 27 or 28. And I don't see that today.
Well, Brian, great insight as always. Any final thoughts you have for us on this Thursday, sir?
Things are getting more toward crunch time here, that March, April, May window. So let me put this into perspective. Corn prices are trading around 750. Jesse, if next week we talk in December, corn is 650, it shouldn't shock anybody. It can go down $1 because it can. So keep thinking about how fast the market can change direction and move, and mindsets and perception changes. So kind of stick with the true and test it. Continue to sell into the rallies, into the spring months. Forward sell. Get to a point where you're comfortable. Utilize your options, your tools. Stay abreast of things. I know it's busy time, but it's also opportunity time, just because the markets are where they are.
Well, Brian, if folks need a little advice with their marketing plan, I know they can reach out to you and the folks there at Total Farm Marketing very easily online or with a simple phone call, can't they?
They sure can. So online, you might just look us up at totalfarmmarketing.com and take a look at our website there. Love a phone call, 800-334-9779, or go ahead and just shoot me an email at Bryan at totalfarmmarketing.com.
Well, Brian, we appreciate the time as always, sir. Thank you much. Have a great rest of the week and weekend, and we'll talk to you next week.
Very good. Thank you.
Brian Doherty with Total Farm Marketing joining us today on Market Talk. That's going to do it for the show on this Thursday, April 28th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.